What is store of value? Imagine you have a jar of cookies. You want to save them for later, but if they go stale, they lose their appeal. This is similar to the concept of a store of value. A store of value is an asset, currency, or commodity that can be saved and exchanged in the future without losing its purchasing power. It allows individuals and businesses to preserve wealth and make decisions about consumption or investment later on. In capitalism, the function of a store of value is essential. It supports saving, investment, and economic growth by ensuring that wealth does not erode due to depreciation or inflation. So, what makes something a good store of value? First, durability is key. The asset must last over time without deteriorating. For instance, gold is durable and does not corrode, while perishable goods like milk do not hold their value well. Next, stability is important. An asset should not fluctuate wildly in value. If prices change drastically, it becomes less reliable as a store of value. Scarcity also plays a role. Limited supply enhances value retention. For example, precious metals tend to hold value better than abundant resources. Portability and divisibility are other characteristics. The asset should be easy to store, transport, and divide into smaller units for exchange. Lastly, immutability is crucial. The asset should be reliably retrievable and tradable without risk of loss. In capitalist economies, money is the most common store of value. It allows individuals to save purchasing power and use it later for transactions. A stable currency encourages saving and investment, which are key drivers of economic growth. However, inflation can erode money's purchasing power. This is why sound money, which maintains its value, is emphasized in supply-side economics and capitalism. Examples of stores of value include precious metals like gold and silver, which are trusted for their durability and stability. Interest-bearing assets, such as bonds or savings accounts, also preserve principal value while generating income. Real estate often retains or increases value over time, though it may be less liquid. Stable currencies with low inflation rates serve as practical stores of value, facilitating trade and saving. From a capitalist perspective, a reliable store of value is fundamental for economic stability and growth. It enables individuals and businesses to save capital, invest in productive activities, and plan for the future. Supply-side economics stresses the importance of sound money policies that protect the store of value function of currency. When money or assets lose value rapidly, saving diminishes, investment falls, and economic growth slows. In practical terms, savers choose stores of value to protect their wealth from inflation and economic shocks. Investors allocate capital to assets that maintain or increase value, supporting capital formation. Policymakers aim to maintain monetary stability to preserve money's store of value function, which underpins confidence in the economy. A store of value is an asset or currency that preserves purchasing power over time. It enables saving and investment, which are key drivers of capitalist economic growth. Sound money, characterized by stability and durability, is critical in maintaining this function within supply-side economic frameworks.